Everyone, Double P here and welcome. So in today's trading session, I attacked Tesla. So I did tell you in yesterday's end of the day trading recap that I had took a position pretty much towards the end of close yesterday, which is the 225.50 strike put for Tesla for today. So here's the box. So I'll draw it for you today again so that you see it. So what happens when, what is the box, right? So that you guys get it, the box is volume, the box is price action, the box is volatility, and the box is support and resistance. That's what encompasses the box. So what do we do when the stock opens up slightly above the box and it's in a strong trend? We are taking a long position. Stock opens up just under the box and is in that trend, we take a short position. Stock opens up inside of the box, doesn't matter, stock, ETF, Forex, futures, crypto, I don't care. It doesn't matter. So it opens up inside of the box. This is called the no trade zone. We wait for a confirmed breakout or a confirmed breakdown, or if you want, you can do like a debit or a credit spread. You want to be defined, you want to be, or take a neutral trade. So you want to be market neutral. Totally your call what you want to do. I'm a momentum option scalper. So I look for momentum, I look for trend, I look for price action, I look for volatility. That's how I trade. That's my DNA. Everyone's going to be a little bit different. So what happens here is we look at this position here. This is where Tesla opens up right inside of that box right there. Under the box, right? And then it comes all the way up here. It tags the 200. You can see it right here. Here's the 200. 200 is pushing down on it. Here's the 20. It's yellow right there. Green right here. Yellow right there, pushing down. This is the volatility bands right here. Volatility band upper, volatility band lower. So you can see exactly what happens in this particular trade here, that volatility is compressed. What happens when volatility is compressed? Well, it's the law of volatility. When a volatility is compressed, it'll either stay compressed and you trade in that range, and then as sooner or later, at one particular point, volatility has to expand. So it can either expand to the upside or it can expand to the downside, but it has to expand after it's been in a compressed state. You can clearly see it right here. It's tight. The bands are tight and flat. Volatility is just super tight. And this is all during pre-market. You can see it right here. All the way through pre-market. Right here. See how tight those bands are? That's tight. That's super tight. It opens up just a little bit, but it's still super tight. And right here, you can see it starts to compress again. And then when the bell opens, it's got to expand, right? Tesla just had to expand. So right here at 9:30, you see this right here, this huge candle, right? This is a Maribozo, right? The second that I saw that, I mean, I'm sending the trade out to you guys. So right just before this close, when this closes and this next candle opens up at 9:32, boom, you guys get the trade. So you see that fantastic trade for you guys, right to the downside. Off of this right here, this is a sell side Maribozo right there. You can't fight that. That's something that's sell side activity. So you get the trade, You get these big wicks right here. Doesn't matter. It's off to the races, to the downside. A little bit of a 23 or 26% retracement to the downside, right? And then all of a sudden, another retracement, consolidation right here, drop to the downside, right? And there you go. There's your trade. What did we get? We got the 225.50. I mean, what a beautiful trade. This is when, by all rights, this is the dollar to the downside from you were actually in the money here while you were really in the money here. So you should have been able to exit out of that position right around here, or this candle here, that candle, this candle. I mean, any one of these candles in this formation right here, even right here, right here, right here, you had ample opportunity. You had ample opportunity to take profit with your particular trade. And that's the way it is for Tesla. It was a fantastic, beautiful trade. So let's come over here. Obviously, that's the trade that I sent out to you guys right there. 222.50 strike put, 236. Lots of action for you guys to get in. And then because I held the trade overnight, and when I exited, it was monster. It was a monster trade for me, obviously. So 42.5%. It was actually more than that. I just had to take a snapshot. I think I was literally like at 58 or about 58 or 62%. I can't remember, but I got a market order. I had to get out. I'm noticing when there's lack of volatility on the downside and I'm in the money, I'm noticing that to sell on the ask, to get out of a position, market makers are really starting to tie up orders, which I don't like. The orders are starting to be left in working mode. So I had to exit on a market order. Like, I had to get filled. The bid-ask spread was still tight. Don't be wrong, it was like 2 cents wide, but I'm taking all my profits when I get the profits, and I'm taking them out, as you should as well. There's nothing wrong with doing a limit order. Limit order is great, lots of liquidity, volatility is in your favor. Limit order, you should be able to get filled instantaneously. If not, you're going to be sitting there and working. It's going to be in working status mode, and you don't want to be in working status mode when there's a lot of volatility around, and the stock, wants to do a 360 and change and start to march its way back up and move up. You want to be in, and you want to get out. So sometimes it's okay for slippage purposes to get in and get out. So you're going to give up a little bit of slippage to get into the trade. You're going to give up a little bit of slippage to get out of the trade. There's nothing wrong with it. If you're very profitable, it's okay to take a little bit of slippage to get out of that trade, rather than sitting there and think that you close the position, because it happens. It happens to me all the time. I think I press the button to close my position. Sell at the ask. Boom, I'm done. I get up, I go to the bathroom, I come back, and I'm like, wait a second, why am I still in the trade? And I'm looking, and I'm stuck in working mode. It's working, and I thought, oh my God. So I always, and this happens quite a bit. So I always make sure now, even after 3.5 years later, I always make sure I'm out of a trade. And you should take my advice, my recommendations. If you're new to the course, or you're in here a month, 2 months, 3 months, make sure you exit. Like, confirm and send and confirm. You know how you have the button that says confirm and send? Make sure you're confirmed. Make sure you go up and you look at your monitor tab. Make sure you look at your position. You're out. You're done. So that was Tesla. Beautiful trade. And then as you can see what Tesla did here, I mean, this was the trade where you see this big Mariposa candle right here. This trade right here, where we at 225.62. If you wanted this to be a day trade, you could have stayed in this day trade. You could have stayed in it all day long. Look, there's support. I'm sorry, there's resistance, 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 resistance. And then look where you are now. What a fantastic trade. Now we're off 217 or 216 or whatever it is. What a beautiful trade for you guys at the Platinum X Power Option Trader member groups to stay in. Had you so choose to do a day trade and stay in the day trade, you were heavily in the money, super profitable. A lot of chop right here. Just a lot of volatility right here. All this right here is all volatility. You know what I mean? You got up, down, retracements, retracement, retracement. I mean, I could put the Fibonacci retracements on here, so let's kind of just do that. Let's get rid of that. Let's get rid of that. And let's get rid of that. And let's do this. So we can take it from a reactionary high to a reactionary low. Should I extend this way? I can do it either way, actually. So what I'm doing is I'm looking at the slope. When you're doing Fibonacci retracements, you must look at the slopes of the price action when you're doing Fibonacci, because I could take it from here, or I could take it here, or I could take it there, because I'm going on the wick, right? If you use the body, if you use the open and the close of the body, there's two ways to do Fibonacci retracements. You can do it from the top of the wick or the bottom of the wick, or you can take it from the open of the body to the close of the body candle, right? So there's a couple different ways for you to do it, and then you'd have to look at, I am looking at this reactionary, I could do it from here. Let's see, I could do it from, I'm going to do it from the cell to the cell, or wherever the actual low is. So let me do that, because I got to do it from the sell side activity to the next sell side candle. Or you do buy side, buy side. There's a proper way where my mentor explained to me how to do Fibonacci retracement properly, because a lot of people screw it up. So Fibonacci retracements, you can do it from the body, you can do it from the shoulder of the body of the candle to the heel or the boot of the body of the candle. You can do it from the top of the wick. You can do it from the bottom of the wick. This is either sell side or buy side. So it's a red candle, green candle. Those are the principles. So if you're going to do it from the sell side, then you want to look for the lowest sell side candle, because that's going to be your confirmed retracement, the 0 point, which is right there, which is what you want, right? There's a 0, because that's what you want. See, a lot of people screw up Fibonacci and they do it the wrong ways, and that's how they get burnt on their trades, because they don't know how to do Fibonacci. Inside of the course, I think it's version 3.0, I go over Fibonacci, or maybe version 2.0, I can't remember, but I go over Fibonacci retracements, Fibonacci extensions. I show you exactly how it works. So this is how you now play the Fibonacci, right? So where's the movement here, right? Bouncing up and down, we got a 76. We got a 76 to a 23.6. All the way through now, 76.4. See, resistance, 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 resistance. 38.2, the golden mean. So look at the retracements. So look at the takeoff from here to there, from here to there, from here to there, breaks through, back up, right there, 38.2, boom, back down. That's like a 23% right there, up to 76.4, doesn't break it all the time, bounce, 38.2, waffles, bounce, breaks through, right? So there's always your strong support and strong resistance levels, and you can take your trades intraday. You can use Fibonacci retracements, you can use Fibonacci extensions to intraday trading, right? Everything's all mathematics because of the candle, because of the time frame that you're using. You can use Fibonacci retracements and Fibonacci extensions intraday. So understand that you can do that. A lot of people say, oh, you can't use Fibonacci intraday. It's a medium to long term, this and that, blah, blah, blah. I'm not going to sit there and argue with them, right? What I do and how I learned and who I'm learning from, and my results speak for themselves. That's why you pay me to be inside this course, to get the trades that you're getting and you're winning. So you can take that however you want. So that's the end of the move right there. It's a zero, right back at the zero line, and then you got profit. If you ever want to know where to take your profits on Fibonacci extensions or Fibonacci retracements, well, inside of the course, I lay it all out, and I even give you the color coding so you see what's profit, right? What's profitable? Where are your profit lines, right? I show you everything, and I color code them, and I band them differently, so I know where my profit is. I don't have to guess. I don't gotta think. I don't gotta guess. I just gotta look, right? Here's my numbers. I just gotta look. And if you're wondering, well, how come the out-of-the-box Fibonacci is completely different than yours? Well, because the out-of-the-box Fibonacci is the standard Fibonacci. You can, and it's not curve fitting, it's not custom fitting, it's a mathematical sequence. You can build out a mathematical sequence for Fibonacci extensions and Fibonacci retracements that makes sense. It's all mathematics, right? The original Fibonacci was built out on a foundation and a formula of these numbers, like 8 numbers, right? If you continue the Fibonacci sequence, you can build it. You can build it out to infinity and beyond, because that's how Fibonacci really is. It's infinity and beyond. There is no set ending or forward. But I don't want to do that, so I just build out extra levels for profit taking on both sides. So let me shrink this down here for you, because you can do the addition yourself. Inside the course, I show you how to do the addition, so I'm not going to go over it now, but you can do it. It all lines up, right? And I want to take three levels of profit. I want to take 3 levels of profit to the downside, 3 levels of profit to the upside with Fibonacci extensions and retracements, right? That's what I want to do. That's how I do my trading with Fibonacci. So that being said, what a fantastic trade. Good for you guys. You learned something with Fibonacci today in this end of the day trading recap. but go through the course. Like I go through it extensively inside the course. What I want to do now is let's get rid of this drawing. Let's clear the drawing set, and I'm going to draw the box for you so that we have the box. So for tomorrow, which would be Friday, you already have the box, and I already have the box. It's already done. So let me see here. Okay, 3 o'clock. Where are we here? 3 o'clock. What can I do here on a downward trend? Where's the 200? Let me see here. What time is that? 3. Support. So I'm looking here. Resistance. The 200. It's still at the highest point there. So I'm going to do my and a volatility band. So on a volatility band crossover, the 200 is right there under it on top of the volatility band. Here is resistance. So that's the top. And the bottom obviously is right there, the end of the day closed, but I'll just draw it right here. And then where's the close? The close is at 4 o'clock. It is 2/19/22. So I can 2/19/22, which is right here. So there's the box, and let me draw the box out here for you, just so that you see it. And then I'm going to delete it so I can have it for pre-market tomorrow. So there's your box. There's your support. There's your price levels. 221.39, 219.23, 218.89. There's the box right there. So that you guys have it. Let me remove it. And that'll be it for the end of the day trading recap. We're good to go for tomorrow. So that being said, Double P, I'll see you in the next trading session. Take care, everybody. Now, that doesn't mean I'm going to go after Tesla tomorrow. I'm just drawing it out for you right now. I'm going to be looking at other trades. Matter of fact, let me do this. Didn't need to put the expected move in there. I'll deal with that in a second. Let me do this here, because the expected move let's get rid of that, apply that. Microsoft. Let's look at Microsoft. So that was the box there for that one. Let me get rid of that. Cancel that, sorry. Clear. So let me come down here for Microsoft. And we're at 3 o'clock. Now I gotta put in my 20. So let me just do this here. And let me get rid of some of these studies here because I don't need them right now. Get rid of pivots. And that. So let's go. Same thing right here. So that's the 200. There's the bottom, 316.88. 316.88. There's our box for Microsoft tomorrow. Let me just draw the box for you so that you see it. There's the box for Microsoft tomorrow. 318.80, 316.88, 316.26. Let me remove the drawing. Let me do Apple. And let me remove the drawing set for Apple. And let me come over here and let's get price level. So where is going to be the high? The high is right here. Where's the low? Right there. So here's the low right there. So let me just draw it above there. I don't have to draw. I can just do it off the low of the yellow. And the close 174 even. 174 even. There's the box. I'll draw it for you. There's the box. Levels 174.88, 173.99, 173.52. That is Apple. Let's remove the drawing. What else am I looking at? Microsoft. So let me remove, clear the drawing set from Microsoft. Let's do Microsoft because this is what I look at. Let's see here. Let's see. Where's my box? So tag. There's the high. There's the low, 316.88. There's the box for Microsoft. I'll just draw it here for you so that you see it. There's the box, 318.81, 316.88, 316.25. There's the box. Let me remove the drawing. So that's all set up. And that's it. So you've got everything drawn out for tomorrow, I hope. You've seen what we do here. And now I'm going to get this video over to you guys so you can watch it yourself. All right. So that's it from Double P. Take care, everybody.